I want to show you what's going to crash 40% on Monday. We're going to talk about how it's likely going to impact the broad equity market. We've got machine positioning, hedge fund positioning, and why Bank of America says it may be time to push the sell button. Is it too late to chase a trade in oil? We're going to take a look at that. Plus, I've got some amazing trade setups for you. Now, let's turn to the Goldman Flow of Funds report, because on Monday, it's all about buybacks, and they go into blackout. They estimate the blackout window will begin on Monday when approximately 40% of companies are estimated to be in blackout, and mark this on your calendars. It's going to end around July 25th. And what we're seeing right now based on repurchase activity is companies are talking up buybacks, but they're not executing nearly as many. And this is going to be something we're going to watch through the earnings season, because one thing we know for sure is companies that are suspending or cutting their buybacks back, well, the market is punishing them in a big way. So we're going to be mindful of this as we go forward, because keep in mind, as the economy slows down, companies run out of money, and that means their opportunity to buy their stock is going to go down. Now, if we see the markets materially move lower, it could trigger the machines to sell. Let's head back over here to the Goldman's CTA corner, where we can see over the next week, we do see buyers here, but if we get a down tape, look at this, global equities, 10 billion, but only about 1.4 billion out of the US. How about over the next month in an uptape? Yes, you're seeing buyers even into the US, but if we have a material move lower, and I'm going to show you why this is in a moment, over 119 billion of global equities will be sold, 34 billion out of the US. And these key pivot levels, put this in your notes. The one you need to know is the midterm 57.93. Let's take a look at the chart of the S&P 500, and I want you to see why this is so critical, because when we look at the volume profile line, what you can see is this is where the most amount of shares have been traded over the past year. Right now, as of Friday's close, it dipped below that. If we see further selling pressure, it's likely to dip down here somewhere around 5,900. But here's the problem. You see these two orange lines? Those are two levels of CTA positioning. If it breaches those, watch out. The machines are going to back off those longs. They're going to look to sell. That's why you could see, again, upwards of 119 billion in global equities sold. But if we don't see a material pullback, I want you to understand that why we could see some long buying here is systematic positioning across CTAs, risk parity, and vol control funds. Well, they've got more to buy, so watch out. This is why what's coming in the markets this next week is absolutely critical, and why we're going to be watching these buyback blackout windows so closely, because if the biggest buyer has been corporates over this last cycle, and we see stocks go down and we breach those CTA signals, watch out below. But right now, hedge funds, they're still massively short this market. We can see from the U.S. fundamental long-short ratio, they are in a deep short position. They've also been adding longs here. So again, if something changes, maybe we get the tax package, the war ends, the trade war ends, you could see a huge surge in stocks, and it's all going to be due to short covering. But Bank of America says, look, based on our global breadth rule, we could be at a short-term top here. And they note that that's when 88% of the markets in the MSCI All-Cap World Index are trading below their 200-day and 50-day moving averages, currently at 84.4%. So again, according to Bank of America, we could be near a short-term top. But let's take a look at the broad equity markets, because again, you saw that one-year volume profile on the S&P 500. It's a major warning sign. Let's start out by looking at the breadth of the S&P 500. We currently see just under 50% of the S&P is trading over its 200-day moving average. And what is that telling us is the market has been largely moved by a smaller number of stocks. That's not a great sign here. Let's take a look at our screens, because what we know is from a momentum perspective, that's based on the RSI, the MACD, and the trend. We have 30 consecutive daily buy signals on our Momentum Timer Pro report. We've got a maxed out 1 month window. Now, if you want to trade momentum, all you got to do is grab those links in the description below. Use those coupon codes for a free 30-day trial, because we also mimic machine positioning. But what we do differently than the machines do is we run a historical overlay. So we see when their signals start to drop, we know likely ahead of time where they're going to move. You want to trade against the machines, we'll follow that report. Let's call our CTA Timer Pro. Let's take a look at the chart again, but let's go back to the SPY, because we again, we see some danger signs here. And how we look at the ETF, what do we see? The 1-year volume profile is actually below here. Now let's zoom into the 6-month. What do you see? It's right there below. So we could see a short-term pullback that we don't see in the futures. If it holds here, that could be a catalyst to send the S&P to retest its all-time high. So we'll be watching that carefully over the next couple of days, but be prepared if this thing unwinds. Keep note of those CTA signals, because if it breaks out, watch out. They're going to be selling in a big way. Let's turn to the NASDAQ 100. What do we see? About 62% of it's trading above its 200-day moving average. A much stronger picture here, but note, a lot of these tech companies are big buyers of their stock, and they're going to head into blackout here very, very soon. If we see breadth deteriorate, that means stock prices are likely to follow. But for now, what do we see? Machine positioning is stretched alongside. Momentum also stretched out as we see 33 consecutive daily buy signals. Now, you'll know we're not holding positions on these for our subscribers. Now, I happen to be long semiconductors, but based on what I'm looking at the charts right now and what you're about to see, I'm thinking maybe it's time to sell. Are you long techs? I want to know. And are you buying, holding, or selling? Weigh in the comments below. Because when we take a look at the chart of the QQQ, we see something called a double top, and that is dangerous. But again, there's a lot of volume support right below it at 516.60, so expect potentially a short-term pullback if something changes. Again, you could see a launch off of that and a potential retest of the all-time highs there. But now let's go on to small caps, because this is where the big warning sign is. You already saw this chart a moment ago, and what do we see? The breadth is deteriorating. We've been warning about this, but could this just be a short-term move? Well, let's take a look, because once again, what do we see? Momentum is positive. We have 29 consecutive daily buy signals. Machine positioning still long here, and I'm not sure how much longer that's likely to last. Let's take a look at IWM, because what is the risk? Is pull back right off of its 200-day moving average. We did cite this before as a potential upside target. It came back, pulled right here into its 6-month volume profile. If it holds here, look for another retest of that 200-day moving average. If it does that and gets rejected there, that's a very bearish signal. If it breaks down from here, your next level of support, well, at least from a moving average perspective, that's your 50-day in green. So keep an eye on the small caps. They haven't necessarily followed along with where the big caps are going. So that is a major red flag in the market. But how about the oil trend? Is it too late? Well, maybe not, because CTAs covered oil shorts. Some maybe start adding long positions soon. According to Bank of America, we believe Wednesday's 4.9% gain was aided by trend followers covering short positions. In fact, 5 of the 12 trend following models that we look at stopped out on Wednesday. The accumulation of a CTA position is typically slower and less impactful for markets than a position unwind, but nevertheless, what we're seeing here is the CTAs could be buyers. Now, where is that signal at? We'll put this in your notes. On WTI, that is 77.8, symbol CL. That's what you want to watch for. If you get over that, that is the buy trigger according to Bank of America. But let's talk about the energy sector. This is one I'm long oil producers, but let's look at XLE, because we put this trade on to our Momentum Timer Pro subscribers back on June 10th. They're already at 4.31%, and what we've seen is a lot of people are short oil. We saw hedge funds are short. We're seeing investors also short as well, machine short. This could cause a lot of short covering. There could just be forced buy, and then if you get over that mark, the Bank of America noted that $77 price level, watch out. Machines could put a persistent amount buying underneath here. So we do think there's more upside potential. We again noted our CTA subscribers. This is Max Long. Momentum turn, and that put us on a buy signal. That is our live stop loss level at 86.95. Let's take a look at that chart now of XLE and get an idea of where this potentially can go, because this right now is the biggest risk to the broad markets and the economy. Rising oil prices, that's going to hit consumer wallets in a big way. But let's take a look, because what do we see above? There's a 6-month volume profile acting to now as overhead resistance. You can see price ran right into its 200-day moving average and held that. 89.91 is the target there. If you're watching those volume profiles, you see the 1-year number there as well. If it can breach that, you can see it trades in a range. As we go back over this last year, that means 93.58. You You can see where the sellers have been at. So keep an eye on this if this breaks out. And yes, there is more room to potentially run, particularly if those CTAs start accumulating long positions and the hedge funds are forced to cover their shorts. But let's talk about the financial sector. Momentum here is negative. The RSI has been cooling off at 44. I want to show you an interesting chart here, because if you're looking to buy the banks, there may be an opportunity here as we go into earnings season. What do we see? Machine positioning backed off a little bit here. We can see momentum has turned to the downside, meaning we're seeing, again, the RSI, the MACD, and the trend now head to the downside. Let's take a look at XLF, because this one's interesting. You see the one-year volume profile. It's now in a position to act as support, because remember, this is where most of the shares have been traded for. So those who are bullish, if they're looking to add positions and they come back in and put buying support here, well, that is a bullish indicator. But look at what happens when you zoom into the 6-month volume profile. You can see sellers are right above here. So if you want to make a run back to the all-time highs, you need buyers to step in here and squeeze some of those sellers hop. And if we see that happen, that would be bullish for financials, but keep in mind it's a very tight window to trade. But let's talk about the bond market right now, because 10-year treasuries, well, if you want to know where their buy signal is, it's 112.01. Put that in your notes. Current price as of BofA Global's latest report, 110.72. But now, do I think it's a time to buy the long bond? Well, we've gotten in and out of this trade on both of our reports, and we've kind of been whipsawed. I do know this: when the Fed starts to cut, this is going to be an amazing trade. We want to get positioned in this when we can, but we're not there yet based on what we're seeing in the charts. Keep in mind, if you see the machines start to buy, that is a strong catalyst. So again, put that in your notes and keep an eye on the 10-year, because right now momentum is positive on TLT. The RSI is at 50. MACD's got a positive cross. Technically speaking, this looks really good. Machine positioning has backed off a little bit, and as we noted from BofA, could be buyers here. And again, we do look at a historical overlay, give us the edge. So yes, our models are suggesting they could be buying soon. That's exactly what BofA says. But here's the problem. You've got overhead resistance based on the 6-month volume profile at 88.09. And look at this. When you zoom into the 10-day window, you see price below. How about the 30-day window? Price right on it. And let's zoom out to the 90-day window. What do you see? Price right below it. Look, you can see the trend rising here in TLT. It may be just a little bit earlier. It could be another pullback. But if it comes back down, holds that 21-day moving average, you're starting to make the bullish narrative here on rising momentum. Let's talk about gold. We got a potential triple top on this chart. Let's take a look, because this is very interesting. I want to know what your opinion is on gold. Is this a triple top, but you need to buy and push this thing into stratosphere? Are you looking to sell on gold? Let's take a look at the ETF. We get a similar perspective here, but we have nailed this trade. Again, you want to trade momentum with us? Grab those links in the description below. Use that coupon code for your free 30-day trial. And we nailed this back on May 30th. We put a buy it open out to our Momentum Time Pro subscribers, up now 9.25%. And yes, we give them risk control levels and update them on a regular basis. Here's our current stop loss level. Let's take a look at the chart of GDX, because right now, if gold breaks out, well, we know the miners are likely to follow. The zoom out here to the max weekly chart, and you can see it's trading way up here. That puts in target this upper level. This is the next level of resistance up here at 63.15. So if we get a breakout here over the short-term window, watch out. We could see miners being a big play. But how about that one trade I talked about in the beginning of the show? You want to talk about opportunity? Is take a look at a chart for Brazil, again, symbol EWZ. Now, momentum is negative, but we did pick up a buy signal a couple days ago for our Momentum Timer Pro subscribers, and that trade now up 0.29%. Again, live stop loss level. You can follow along right with us. You can see machine positioning. There's some potential buying here based on our historical overlay, but let's take a look at EWZ. Let's find out what's going on in this chart, and if it's an opportunity, And I'd love to know what you think. Weigh in the comments. Is this a buy, sell, or something you're just not interested in? Let me know why. Let's look at momentum here. You see the RSI is rising. You can see the MACD is looking to get a positive cross and push higher. But look at this at the 6-month window. You have a potential double top here. But again, price looks to be bullish here, moving higher. If it breaks out, which it looks like it has the potential to, especially since the dollar looks to be weakening, what you can see is this big chunk of volume here, and then you get a short-term gap. What we're looking at is a supply zone, and what happens if it breaks out of a supply zone? Well, it moves into the next zone, and that next zone is right up here around 30. And then above that, well, you've got 32, 34. That is your 2-year volume profile line. So right now, Brazilian equities just dropped on our report, something we're going to be watching, and you can follow along right with us. So on Monday, again, keep in mind, the buyback blackout window starts. That means 40% drop in corporate buying power. It may have an impact on the markets, it may not, but watch those volume profiles, watch that double top in the NASDAQ, and if oil screams higher, which it certainly has a potential to, watch out, it's going to have massive impacts on the U.S. economy. But again, keep an eye on the bond market, keep an eye on Brazilian equities. Opportunities are out there. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.